What's up everybody, Tom here with another video. In this video we'll be discussing the latest stock market news for the week ahead, along with our technical analysis top-down approach on the S&P 500, Nasdaq, volatility index, Apple, and the US dollar. The stock market has been very interesting over the last week, but there's no surprises into a long weekend that we saw bullish momentum. We also saw a break of several key resistances that may lead to further bullish momentum. But that doesn't mean that we shouldn't be looking at the sectors, the volume analysis, and the put-call ratios for hidden bearish intents potentially in the markets. There's a lot to unpack this week. Stay tuned. So as you all know out there, one of the things we like to do together in our weekly analysis is understand what happened last week for a couple of hints on what might be happening for the week ahead. Let's take a look at some of the sectors that performed really well. So we know the FANG sector performed pretty well, being the technology, but interesting standouts last week were energy and of course utility sectors. They had a real rotation in them and it was pretty large overall. Before we get into our general sector rotation though, I want to just quickly discuss election years and average returns into election years. So usually September and October are weaker months. But I want to focus on past the election now. I want to focus on November and December and just quickly discuss the really key, extremely bullish kind of markets that we see coming out of an election. Remember, this is either Republicans or Democrats winning very strong numbers coming November and December. And this is in line with what we expect to happen over the next 12 months. Remember, when the S&P 500 hit an all-time high and a new high, we basically were lining up for statistical facts of another 8 to 9% over the next 12 months. Since we've had our good corrective dip and now we've broken to a new high on resistance, this could be leading up for further bullish momentum into what we call the Santa rally or the Christmas rush. So just food for thought during an election year, how the stats hold up. So what happened on Friday? Well, Friday outperformance was on the Nasdaq when compared to the S&P 500 or Dow Jones. We saw the Nasdaq start to crawl back, break a key resistance zone we took looking at on the charts a little bit later, and it did 1.51%. When we look at the sectors and how they did during that period, of course, for the Nasdaq to do so well, the technology sector had to be leading, and the energy sector overall did take a little bit of gains off with a negative 1.6. Over the week though, energy sector, material sector, and utility sector outperformed the technology sector, which is a rare occurrence during this crisis. And this is a good sign for bullish intent in the markets. Generally speaking, for the first 3 to 6 months during a proper recovery phase, let's say in the economy, we usually expect energy sector and of course utilities and financials to outperform the growth stocks. Value stocks should come back into phase, and we're starting to see a little bit of pickup in some of these value stocks. Will financials be the next one to be picked up next week? Time will tell. Very interesting thoughts though on the sector rotation. We'll be talking a little bit more about that as well in our live stream, which will be on Tuesday during the opening bell. So make sure you subscribe and hit the alert button to come and join us during our live streams in pre-market analysis. What about Apple though? Apple is also another bit of key news for the week ahead. We have an average 12-month price target, according to the boffins out there from Goldman and everybody else, at $120. We're currently trading at 117 basically, and we usually see Apple have a bit of bullish intent into a key news event. What's going to happen during this news event? Well, it's all about iPhones, isn't it? But they've got a couple of other bits of information they're going to release. Probably their own chip in terms of the notebooks themselves and their Apple laptops. We're going to have, of course, the iPhone 12. We're going to have AirTags most likely, another form of AirPods, and maybe even a HomePod mini. And this is just what's known. But by now, most of the leaks are starting to come out and they seem pretty accurate. So will the market like it? Often it's a hype into the event, and what we've seen recently is a sell after the event in Tesla, Apple, and other stocks during these key periods. If you have a look at the Apple stock, it's already started moving up, bouncing off the 20 and the 50 exponential moving average, and it still hasn't hit, of course, the 117, 118 resistance, or the more key resistance that's probably around 120. So definitely a stock to watch this week. So let's just quickly talk about markets. Let's talk about the CBOE daily market statistics, in particular the put-call ratios. Well, here's something interesting, and this is good if you're a bear in the markets. 1.54 reading on Friday for the put call ratios for the SPX. This is down from 1.8. And remember, a lower put call ratio is positive to bearish intents in the market. If everybody thinks the market's going to short, it doesn't do it. That's what we saw, obviously, into that euphoric rise into September. We had the market going super long, put call ratios were down at like 1.3, and then all of a sudden, bang, corrective phase incurs. When we have high put call ratios, it will never generally happen. I just want to reiterate that when everybody thinks something's going to happen, it generally doesn't in the stock market. That's just how evil Wall Street is. I also just want to bring up this chart. I was doing some analysis. I'm obviously Australian, and I was doing some analysis of the federal budget. And I think that our federal budget here in Australia, it hits up very much so small to mid cap stocks. And I've actually taken out what we call the ASX 200, and I've brought in two sheets here. So we've got the red line, which is the ASX 20, and the blue line, which is the 20 to the 200. So basically the bottom 180 of the top 200 stocks. Notice the outperformance of the blue line versus the red line. And this just shows you the power of being able to instantly read a budget return and understand the power of what the economy is going to be doing over the next couple of years. A massive outperformance of the small cap stocks due to the tax deductions and all sorts of things they're getting. And remember, with this election, there's a lot at stake in terms of tax deductions and infrastructure builds and all sorts of things moving forward. So it's a really great year to understand a little bit more about how they're setting up the economy in the US, and we'll be covering that more on the channel as well. But I thought this comparison chart would show you quite a lot. And it's happening in the US right now with the Russell 2000, the smaller cap companies, outperforming several other key indices in the market. So we'll skip over a few of these things. I think oil is definitely an interesting point this week. We talked about it in the Friday video, 41.20 resistance. It's testing that right now. Remember, it's basically in a double bottom pattern formation, but you could also trade it like a channel. We've got our resistance. Potentially now we short down to the 39 or even back into the 37s. And if it continues to hold in this, it gives us a very good trading range. If it breaks the trading range, it obviously gives us the target of the entire move to the upside, or if it breaks to the downside, the entire move to the downside. So oil is trapped right now on both Brent and WTI. Worthwhile checking out this week if you're a trader and trapping up the market. On to US dollar. Well, US dollar tanked on Friday. It fell through, and it fell through hard, and almost came straight down to that 92.80 zone. I think it still really will want to go and hit that level. Let's go to the 4 hour and just have a look at this 92.80 zone. So it broke through, closed below, and look at that sell-on event that happened after that. Got through the 200, got through the previous low, continued to tank into the close, and we have a very strong support here along the 92.80. That was what actually caused the spearhead up originally. Multiple supports. You'd probably expect the market to target this area, find support here, and then potentially bounce a little bit off it. So what might happen this week is it goes down a bit, then it comes back up, maybe even tests 93.40 from the downside. And overall, this previous support will act as resistance. We might have a moving average here as well. There could be some good opportunities on US dollar this week. But the more the US dollar stays low and continues to decline, the stronger that is, of course, also for the bullish case on the S&P 500. If we take a look at the VIX still remains between the 25 number and the 30 number. Pressure was put on Friday to get it under 25. We talked about how this was a channel between resistance and support. And for this week ahead, if it continues to bow down here, closes below, we could see further fear coming out of the market and therefore more bullish intent in the markets overall. If we take a look at the Dow Jones, here is the inverse head and shoulders we have on the 4 hour. This is obviously the daily chart, but I've got the extrapolation out here. It's basically saying that we should not only make new highs on the Dow, but we should also get to around this 29,500, 600 level. What may happen this week though, is we might see some bullish movement up to maybe 29, and then a little bit of correction while we wait for the 20 moving average to catch up with price. Remember, it does like to revert to key technical zones. Another thing I might look at is maybe the 4 hour and see whether it bounces off the 20 moving average on the 4 hour. This is an exponential moving average, And generally speaking, the Dow and S&P like to hit these zones as they pull up. It's like a 2 steps forward, 1 step backwards kind of event that happens on these markets. But let's talk about the SP 500 and then of course the Nasdaq. Here we have another inverse head and shoulders. This one is definitely more key. On the futures, it's clearer than it is even on the SPX. We've got the left shoulder, we've got the head, and of course we've got the right shoulder. And if we look at where it's basically pointing to, it's really saying we should get back and testing the previous highs. So we've seen a couple of bullish days of close. It's clearly above this zone. We are hitting this little level of resistance here though onto the Friday. So maybe here we see some selling pressure and we go back down and start testing the previous resistances, which will act as support around this 34.20. That could be certainly a thing that happens this week. A few people have mentioned volume in the comments and they're saying that volume is historically low. So I want to bring up a couple of things here. One, when we were breaking past the previous resistance and coiling over here, volume was incredibly low. We can see that right here. Volume was lower than expected. But over here, volume is not really that crazily low. On Friday, there was some volume that came through. It was generally consistent with the previous days of volume, and you always see more volume on, of course, these crashing days, the days where the market gaps down or moves through. Big red days generally have more volume, and we do usually like to see an increase in volume through the break. So we have had a slight increase here. I brought up the S&P 500 volume stats here, and you can see that on the 6th of October, 7th of October, and 8th of October, and all those days, we had, obviously 4 to 3.8, 3.9, pretty consistent with what we've seen for the last couple of weeks. If you scroll down all the way to previous years, e.g. last year, you'll notice that volume is still up on last year's trading, and that makes sense as well. There's a lot more volatility in the market, a lot more bigger daily ranges, and a lot more trading going on. So volume, I don't think is too scary right now, but overall, I am still watching it and it's still a very important factor. You generally want to see an increase in volume into a break, and then of course an increase in volume through the move itself. You don't want to see low volume, as that really does show us generally a faker move and not as accurate as higher volume. So for the week ahead, I think I'd also be looking at the Nasdaq as well. The Nasdaq closed at 11,736. If we're taking a look at what happens next, we might see the Nasdaq move to that 200 zone like we've seen recently, a lot of moves to 200, hit resistance at 11,800, pull back, find the previous resistance levels around this 11.6 as support, hit a 20 moving average on the 4 hour, and then continue its move up. I do think that we're looking like we're bullish right now. Price action overall does look bullish. If we go to the weekly in our top-down analysis, the market made a new high. It closed on its high. Also, what did it close past? Previous wick rejection. Very important factor. Whenever we have a body close above previous wick rejection, that shows a lot of bullish intent. Look at it over here. Look at what happened after that. Another very nice bullish week. Wick rejection, bullish close, shows that the stop hunt has really occurred and the market wants to move to the next level. So this is a bullish movement here from the Nasdaq, from the S&P, from the other indices. If we go down again to the 4 hour and we just think about it logically, big moves up usually have corrective phases back into the 200. So every 200 points, we think that there could be resistance here on the Nasdaq. 11.8, some resistance, 12,000, some resistance. And then we go back to the S&P 500 and we think, okay, if this inverse head and shoulders is to play out, we're probably thinking 3,580 to maybe 3,600 level. There's still quite a lot of movement here, still quite a lot of pullback rotations. So then we start to think, well, where is the consistent kind of moving average that's been respected throughout these bullish runs? And I think for the S&P 500, if we're going to have an aggressive bullish run, look at this previous left-hand action. The 20 moving average was a beautiful moving average for pickup corrections. Could that be again? Will we see the market come back down, test the 20, and then continue its movement up? Maybe it hits 3,500 first before finding resistance. Probably would also synergize with what we're thinking about on the Nasdaq as well. A lot of things go into the analysis this week, but pullbacks to moving averages do certainly make sense. So if we talk about Bitcoin quickly, I had this wedged up. I was talking about this particular symmetrical and how it was going to probably bullish move. It did break out, nice little coil after that, pull up, nice little coil, great trading on the smaller time frames. We're now trading the weekend just above that 11,200 zone. So the next move makes sense to be really for 12,000. Now, if this is what Bitcoin's showing us, it's showing us that there could be a lot more further weakness in the USD. When Bitcoin broke through and closed above this 11.2 area, it was showing a lot of bullish intent. So we've still got movement here on Bitcoin towards the bull side. It's been pretty bullish recently. We've talked about it for quite a few weeks on this channel, and I still think there's a little bit more left in Bitcoin for the week ahead. So what about the news? Well, we have a bank holiday, of course, in the US and CAD on Monday. Expect pretty low volume trades on that day and potentially fake kind of futures movements. Then we've got Tuesday where we'll be doing the live stream. And then usually throughout the week, not a crazy amount of new data coming out. We were, of course, expected to see a new debate, but that looks like it's off the table. And again, we always reiterate, use Market Watch potentially for your calendar and Forex Factory to get the full information for the week ahead in terms of news. We hope you enjoyed this video. If you did, please remember to subscribe and of course hit that bell. We're looking forward to, of course, doing the live sessions with you on the Tuesday bell session and bringing you more content for the week ahead. Bye for now.